Yes, sir. What it do? It's your boy, Mr. World Shoe, aka your favorite investor. Let me tell y'all, man, today the markets continue to sell off from the prior year. If y'all have been paying attention to the markets, y'all know that we have been in a downtrend all of 2022, and 2023 started, and well, guess what? We had another down day in the market. So in today's video, we're gonna go through today's news, break it down for you, and discuss with you a huge opportunity that arose in today's markets after the sell-off that happened today. I'm gonna give you guys some recommendations that I have and what I think that basically went on in today's market. Now, as always, please do not take any of the advice in this channel as a recommendation. All views are my own, and information on this channel is for educational and informational purposes only. This is not financial advice and should not substitute for financial advice from a professional. So the first trading day of the year is wrapped up and in the books. And if we look back what happened on this day, right? January 3rd, 2022, y'all take a look at this. We hit our peak. It was actually January 4th. We hit our peak, our highest point in the market, SPY 479. And since then, we have continued that downtrend and we've never come back to touch that point. We at least have something to look forward to, right? Because we know that it can't get any worse than that. Like right now, we're starting the markets basically in the middle of this zone here. You guys can kind of see we're kind of in between that 425 range to 358. Somewhere back in October, we bounced off that 358 zone, kind of came back up to the 400s, and now we're just around that 380 mark. And today we've had a 0.42% loss on the SPY. So we know the narrative going into this, right? The Fed is going to continue raising rates on the pursuit to lower inflation, and this will most likely lead to an economic slowdown, right? We know that. Now, what we don't know is what the final terminal rate will be, and no one knows how far the stock market can drop, right? We've already been down to that 358 level and we've bounced off once, but should the Fed continue to raise rates at an aggressive rate, or we get poor economic data, then we might be able to crack that 358 to the downside. Let me tell you, it would be a fire sale in the markets. But like I said, we don't know what's gonna happen. So knowing that the Fed wants to see slow growth, construction spending news increased to 0.2%, and the previous report was at negative 0.2%. So this is an increase, and this means that the Fed's job is not done, right? If we're still spending more on construction, the Fed is gonna see this as a data point that they have not seen slowed growth across all sectors. So I truly believe that the Fed is not going to be happy until they see that growth halt. Like, they are on a mission. They have shown it all 2021. All 2022. The narrative has been don't fight the Fed. So going into 23, until I see otherwise, I see things increasing, I still believe the Fed is going to increase rates. Now, the above point was also reflected in the markets today when around 9:45 we got the S&P manufacturing PMI, and that release, and that shows shrinking demand in the factory activity. So you guys can kind of see, we're going to take it to the charts. Around 9:45, that news came out, and you guys can see this huge bearish candle in the news. This is the SPY in the 5-minute chart. See this huge bearish candle here, and you guys can just see the continued sell-off pretty much throughout the whole day. Got a mini bounce at the end, but that news pretty much kicked off the fact that they showing shrinking demand activity. And although this is good news for the Fed in terms of they're seeing prices come down across the board, it is still bad news because we are still on the cusp of slowed economic growth. So really there isn't any kind of safe haven right now. Good news is bad news and bad news is bad news. I don't really know how else to explain it, but like I said, until we see the Fed come back and change these rates over, we know the narrative, we know what's going to be going on in the markets. Y'all see the huge bearish downtrend, and until this point, there is no significant catalyst to boost this market higher. Now, in my opinion, being a long-term investment, it was a fire sale today. I think it's a great opportunity to add to some of your positions, maybe an excellent way to add to some of your weak positions where maybe your cost basis is possibly above the current price where you bought in at, so that you can significantly alter some of your positioning and put yourself in a better situation for when markets do finally turn around, you were able to bring down your cost basis to a more manageable point. So I definitely took advantage today, and I actually ended up adding some more Apple to my position. Now, in my opinion, Apple is a fantastic company, a phenomenal company with a fantastic business and great management. So I did take the opportunity to add some more today. This stock was battered all 2022. You guys can pretty much see here, really didn't do much for most of the year. Huge flush down in June. Did a great job recovering in August, and then after that it continued to slump for the rest of the year. Now we got this huge bearish move to the downside, about 3.74% move to the downside. So I thought it was a great day to add it to my positioning. I don't see this trending up for any apparent reason right now, besides the fact that we are expecting earnings on the 26th. They have an estimate earnings per share of 1.9, an estimate total revenues of 123 billion for that for that fourth quarter. So if the earnings comes through and earnings is for whatever reason good, then we might see a little bounce and we might get back up to that 136 area. If not, if earning does come back negative, or they miss on one of the two, I do see a potential slump down to this 115 area, which is where I think the next support level is. But regardless, this is a company that for the long term, I do believe that they will see themselves out of the 2023 slump that we are going to experience. I think that with the products that they have, they are well positioned to continue growing. Their subscription-based models have also been an integral part to the growth of their business. So what I really like and what I'm more impressed with is how they've been able to increase their revenues, not necessarily on their product offerings, but also just on their services, right? They've done a phenomenal job on offering more services to go and make more cash flow. They're also a cash flow heavy company. So should they need to make some acquisitions or pay off some debt, they are well positioned to do so. So like I said, I did take the opportunity to add my position. This is in no way financial advice. I currently am, I think I have about a 135 cost basis when I started averaging in. And like I said, I averaged down some more today. I do think the stock will probably end up hitting 115, which I'm okay with. And if it does, around that earnings time, if they do come back and show us that, they didn't have a strong of a quarter, I think that this is going to be on even more of a fire sale, and I'll be able to take advantage and add some more to my position. So let me know down in the comments, what are some of y'all predictions for 2023? I'm expecting things to change once the Fed changes. That's about the only thing that I could really say. And let me know how y'all fared for the first trading day of the year. As always, it's your boy Mr. World Shoe. Don't do anything I wouldn't do, and make sure you always protect the capital. Peace.